You're listening to the Homeownership podcast by Momentum Realty, real estate talk for buying, selling, and owning property.
Hey guys, Sean Patrick Maloney here, broker owner of Momentum Realty, located in Hanover, Massachusetts. Welcome to episode 21, Obtaining a Loan Approval. I'm your host, Sean Patrick Maloney. Thanks for joining me this week. I want to talk to you about a really important subject. It's called financing. Financing is one of the most important parts of buying a home, and so often do we feel so lost because there's no one, never in high school, never in college or anything, do they talk about the financing and buying of a home. Everybody talks about it and they say, you need to get a pre-approval, and then you just buy a house, and then once you have the pre-approval, you buy the house, you close the loan. But I'm here today to talk to you about some of the important things that people have skipped over telling you. Some of the things that you need to avoid, as well as some of the things you need to do in order to make sure that pre-approval becomes an approval and becomes a closing in the long run. So let's talk first about some of the things that you should do. This one might seem obvious, but I want to talk about it anyways. Making sure you continue to pay any of your rents, any of your bills, your credit cards, and everything like that. Simply by getting a 30-day late, you can knock yourself out of the qualification for a home. And a 30-day late is pretty easy to get when you're not being careful. You could even miss a payment on your Macy's card for $10 worth of perfume and put yourself out of a house. It's that important, because missing a payment says that you're not trustworthy and that you're not going to be able to make the payment. And as crazy as it seems, just a $10 payment, think about it this way. I'm about to lend you a couple $100,000, but you can't pay someone back $10? That does not look good for a lender. In order to avoid having any issues and having a smooth loan approval, you really want to make sure you're paying all your bills and making sure they're current. There's a couple different softwares and apps available online to manage all your payments. You could use a check register, but I will tell you that we all live hectic lives nowadays, and it's really important to put all your bills somewhere. I recently can admit to it. I lost my wallet, canceled all my debit cards, got new debit cards. I got a notice in the mail the other day, an email actually, from my car company saying you didn't make your payment this month. I forgot to give them a new card number. Now, I was only a few days late, but if I had let it go 30 days, I would then have to explain that to any future loan company of why I missed the payment. And when I write that I lost my wallet and I didn't actually give them the new card number, is that going to make me look trustworthy? No. So just make sure always that you're managing your money and you're always managing what you actually owe other people and making sure that you're paying them on time. So that is just absolutely imperative to keep existing accounts up to date. Then another one, this is one that a lot of people forget. When you have a job and you have an opportunity to move, you got to be really careful. Even if you're going for a pay increase, changing your current employer during the process of buying a home can actually be very detrimental. It can show that you're unstable and that you're moving around a lot. Now, I would talk to your lender on this one and actually speak with them, the person that's actually going to be producing the loan, and say, hey, I've got an opportunity to go up. But sometimes people forget moving jobs can actually mean changing the amount of money you net. Not the amount of money you gross, but the amount of money you net. Say they have a different health insurance policy at the other company where you have to pay $200 a month instead of $100. That means $100 extra a month come out of free working capital. And just throwing some random numbers out there, at about 3.9% down, another $100 a month equals about $20,000 in pre-approval. Obviously that number varies person by person, case by case, but when you think about a number like 100 equals 20,000, that means 500 equals 100,000. So small changes, $500 a month. It's really not that big of a change when you think about the overall budget. That's only $6,000 a year, but that can disqualify you from $100,000 in borrowing. And again, I'm going very vague with the numbers here, but just to give you an example of the exponential growth of money when we're talking about lending. The next one we want to talk about is keeping your same insurance company. After you close the loan, you can move insurance companies. But constantly changing things like insurance companies can again lead to them thinking that this person's kind of flaky and moving back and forth. I won't go any further into that one, But just know that you can change your insurance company at any time after, as well as the day that you sign that loan and you close on the house, you can change your employer right away. So maybe you tell that employer that's interested in taking you to the next level and bringing you into their team, hey, I'm buying a house right now. Why don't we set the start date the day after I get into the new home? That way there, my mind is on the job, my mind's on you, because I can be honest, I'm a little bit distracted with buying my home right now, and I have a lot to do. I have time off with these guys I'd like to use up. I'm going to use my days off to do my home inspection and do different things like that. So just think about it in that fashion. It's really going to actually help you out big time. So then the next one is continuing to live at your existing residence. Changing around your residence all the time is something that some people like to do, but you need to be careful with this one. If you're in a rental, showing that you're consistent and you're making your rental payments and you're consistent with where you live, it's really important. If you're the type of person where you're living out of a suitcase and you're moving place by place, the bank's going to be a little bit skeptical as far as actually letting you borrow their money to buy a home, because how do they know you're going to want that home in the long term? And then the next one is, sometimes people are like, well, what I'm going to do is I'm just going to stop using my credit for now, and that's going to increase my score, because if I just increase the amount that I spend cash-wise and I don't increase the amount I spend credit-wise, slowly but surely that's going to chew down the amount that I owe on my credit, which is going to show them I'm better. This is the strange part. It's, I'm gonna go out on a limb here and actually kind of burn the credit companies and say it's kind of bullshit the way they create credit scores. If you don't use your credit, you consider it less of a good lend. If you do use your credit too high, you consider it a good lend. What they really want is you to run the happy medium of losing to them every day. They want you to borrow just enough that you're making payments and you're not paying it in full. And the reason they want that is because then they get the return on their money. They get their 20%, their 30% return on investment through getting the annual percentage yield rates and everything like that. So continuing to use those credit card companies and things, buying your gas, things like that, don't feel bad. I mean, if you do pay it off every month, certainly you can do that, especially if you have a great credit score. But if you're already working in credit and you already have some that's there, you don't want to just go flying around changing things. You want to keep it an even keel. One of the last do's you want to do is make sure to reach out to the person who's going to be originating your mortgage. It's really important to go to that person because they're the person that's ultimately going to know all the answers. Of course, this quick little podcast here is going to give you some help, give you some of the ideas of what to do and what not to do. But just make sure whenever you have any questions, you reach out to them. You're not going to bother them. They'd be much happier to hear that you reached out to them than to be calling you saying, why the heck did you or why the heck didn't you do X, Y, Z? Because at the end of the day, there's little tiny things that you can do that can disclude you from getting your next thing. So let's talk about some of the things that may disclude you from getting you to the next level and buying that actual home with the pre-approval and making it from a pre-approval to a closing. Let's avoid all major purchases. Major purchases can include cars, boats, jewelry, and so much more. We can't go out and just instantly just stop buying things. Even if we have the money for them, we can't just do that. Again, you can reach out to the person that's going to originate the mortgage and check in with them to see if they'll allow you to do that. But don't just go nuts and just stop buying things. Even if you got a raise at work, even if you got suddenly you hit big on the Lotto Live or something like that where you have the money, just make sure you check with them because all these new things, especially if you're not buying them cash, lead to more payments. And again, when we went over $100 a month equal $20,000 and $500 equal $100,000, you can see how buying a new boat at $300 a month can disclude you from right around 70 or 80 grand, which that could be huge. That could put you out of buying that house. You might not even actually be able to afford it. Or, you buy a new ring and you think, okay, well, I'm going to go down to those guys over there at Zales because they have a 0% finance for 6 months. You still owe that money and the bank still looks at it as a payment. So you got to be really, really careful for that. And then think about this one. Let's not apply for any new credit, even if you seem like you're going to get it. If you need a new credit card, you need to change something, again, you're going to reach that mortgage person. But let's just avoid those until we finish up. Most of the time, the temptation is to buy the furniture or to buy the fixings for the house before, we all seen the Bernie and Phil's or the Bob's Discount Furniture, Jordan's Furniture. They're running a great sale at 0% for 6 years and I can just buy the couch and I don't have to pay anything until I close and I'll just get everything done. I'll go grab the measurements and the day that I close, they'll move it all in. Hold your horses. Slow down a little bit. I know it's easy to think, okay, I'm just going to have this seamless move. I'm going to close. The moving guys are going to come. The furniture guys are going to come. By tonight, I'm going to be watching the big game on the big screen TV that I bought down at the appliance store on 0% financing. I got the couch for 0%. I got all this. I got the money for it. It's no problem. I'm going to only pay what it says on the price tag by doing the 0%, and I'm going to get free delivery and all this stuff. But the thing is, you're burying yourself in debt, and the bank is going to see that as burying yourself in debt. Both you and I know you can afford it, but that doesn't matter. The bank looks at it as you're borrowing their money in order to maximize your leverage, in order to widen your platform out. And how is this person going to keep balance? They want to know that you're going to be able to make these payments. One of the next ones that's really, really common and really, really important to remember is balance transfers. We all get these different cards in the mail that say you can transfer your balance from your other account to this account for 6 months, no financing. And again, you'll notice this commonality of most of these subjects when you keep talking about these 0% for 6 months or 0% for 6 years or whatever type programs. These are the ones that accidentally break the whole system. These are the ones that are sounding like they're great. Oh my God, this is actually going to lower my payments. The bank's going to be so proud of me. I'm making great fiscal responsible decisions. Doesn't matter. Again, the banks are about getting their money. They're not about what you're doing with your money as far as always being 100% responsible. It's more about making sure that their money is safe and lending to you. And when you're bouncing balances from one account to another, it means you don't plan on paying them for a while, and they're concerned by that. The next one is really easy to understand. Don't max out or overcharge your credit accounts. Overcharges is something you think you just get a little email or you think you just get a little text message, but believe it or not, even though they don't show on your credit report public-facing side, these are marks and Mars on your credit that are going to slowly but surely deteriorate your credit, and they're going to ruin your credibility. One of the ones that I want to point out to you is, say you have your credit card or your bank account with Bank of America. Now you're going to open a home loan with Bank of America. If you think they don't have access to everything that you've been doing on that account, you got another thing coming. They also have access to each other's banking records and things like that on certain levels, but when you're doing an in-house loan where you're at Citizens Bank, your bank account is at Citizens Bank, and you bounced a check 5 years ago, these things are going to come up. These things are going to come up to burn you. So you really, really want to know why everything has happened in your past and where it's going, and you really want to be careful while you're in it of where it's going, and make sure that you're not doing these things like running your debit card when you don't have money in the debit account, but it's in the checking account. Move it from the checking account first. Don't rely on that little text message saying you have insufficient funds to move over funds, and don't be paying little, okay, it's just $25 or just $35 for the overdraft fee. Oops, I forgot to move some money. These things can make you look very, very unreliable, and to the bank can make you look like, geez, I don't think that they deserve hundreds of thousands or possible millions of dollars to buy a property. So think about that. The next one, we already kind of talked about it, transferring debt, but the other one would be consolidating, going down in the amount of cards you have, closing out accounts, closing down certain cards. Okay, well, because I had such bad credit debt in the past, what I'm going to do to make me better is I'm going to just close out certain accounts. No, because you got to remember we have credit to debt income ratios. So one thing that we have is available credit ratio. So if you have $70,000 available to you, only borrowing $10,000, we have a much better ratio than if we have only $10,000 available to us and we're borrowing $5,000. That second example, we're at 50%. Even though we have total less credit available, we actually have a worst case scenario. So don't be consolidating your debt down to one or two credit cards and closing out other ones. Don't also open or close any installment loans. Installment loans come in many forms. This could be you just broke your teeth and you decided that, okay, I can't afford my teeth and now I need to open a loan. Be very careful. You may need to talk to other loved ones in your family. You may need to talk to friends. You may need to talk to the finance person if it's absolutely necessary. These type of things come up. Medical emergencies come up, and we do sometimes need to make financing on them. But make absolute certain that you need to finance it and that there isn't a way without taking away your down payment, but maybe you have a life savings account. Maybe you have these things. Just realize that, again, the day you close this loan, the day you close on the home, you can then go back and you can pay off backwards that by opening that new account. But just make sure that during the time of working the loan that you're not just coming up with new installment loans or new credits or anything like that. Next one I want to talk to you is when you have collections or you have payoffs or you have different charge-offs or things like that in your past history and you're going to be working with them, don't just pay them off without talking to your mortgage professional. There are strategies behind paying off old debt to get your credit rating up. Don't just decide, okay, what I'm going to do is I'm going to just start throwing money at the board. I'm going to take my money and I'm going to pay off as much as I can as fast as I can. I know this sounds like a great idea, and I know you're probably sitting there going, what the heck is this guy talking about? Don't go pay things off as fast as I possibly can. Well, this stuff is all looked at as being irregular, sporadic, and not trustworthy. So make sure you talk with your mortgage professional who's going to be originating your loan and say, okay, I have $500 and I have this debt over here. What should I pay off? What shouldn't I pay off? We've already talked about the furniture on credit, but I do want to run back to that one because of the fact that that is something that is the most tempting fruit out there. When we're buying a home, we're going to need a couch, we're going to need a bed, and there are so many different great programs available where you can get that stuff at 0% and you can take it home, delivery date whenever you want, you align it with the closing, and just be careful of that. So then let's talk about regular standard bank accounts. Don't be opening or closing any. Use your existing accounts at that time. If you needed to open an account, talk at the beginning with your mortgage professional and say, hey, I only have a bank account on the savings side. I'd love to have a checking, or I only have a checking and I'd love to have a savings. But don't be just opening and closing accounts, especially closing. Closing can really be detrimental because it's continuing to show them that you're irregular in your spending habits and you're irregular in your saving habits. Then the next one down, don't start any home improvement projects. This just goes along the line of don't be spending a lot of money while you're in the process of this. Sometimes if you're selling a home, you're going to need to do some home improvement projects. This is another category where it's talk to the lender. Make sure you're doing it correctly because a lot of people, they are going on their Lowe's card or their Home Depot card. And again, I'm just talking about that evil enemy, that 0% financing for 6 months, that 0% financing for 12 months. That money we love as people living in America, for the fact that we're here and we have credit available to us and it's free a lot of times and it's 0%, that stuff is what's going to burn you when it comes to getting the home. In America, we have that greatness of this country having free and available credit, and in a lot of places in the world you can't borrow it, but that same free and available credit that can help you can also hurt you when it comes to larger purchases. So I mean, your mortgage guy is probably going to kill me by now, but I'm going to say again, if you're going to do it, talk to your mortgage professional before doing it. And then here, let's go over some of the ones that people don't think about. How about opening a new cell phone plan? They pull your credit on that. A new gym membership. They pull your credit on that. So I'm not telling you don't go work out. You can certainly go for a run. You can certainly go do things. You can pay cash for a program for the entire year. You can write a check to them for the entire year, things like that. I'm not telling you not to do them, but think about those programs, these different things that we do that are running our credit and saying that we're obligated to a monthly payment of X, Y, and Z. You can go on Google right now and buy the newest Pixel 3 phone, $30 a month. All these types of things that seem, okay, this is really easy. And again, I mean, not to harp on something I've been talking about the whole time, but Google's financing you at 0%. Why not just borrow their money? Why would I give them $1,000 for the phone today? Well, the reason you're giving them $1,000 cash for the phone today is so that you don't have another $50 a month or $30 a month payment. Again, $50 a month equals $10,000 on the total approval price. So if you're just at your total top level buying your home and you're like, oh, I'm going to get a Google Pixel 3 for $50 a month. Well, guess what? You just disqualified yourself over having the newest smartphone available when you already had a Samsung S8 or whatever phone you're running. Notice I don't mention any Apple products because I'm a Samsung and Android fan. Just putting a shot in there for that. But anyways, guys, what I really want to get across through this whole thing and the do's and the don'ts is make great financial decisions, but include your mortgage professional, and always remember that adding any sort of payment and any sort of debt to your ratio is really going to hurt, and make sure that you don't do that so that way we can help you close on your home. Working here at Movementum Realty, I've learned a ton about mortgages because of the fact that I pair myself with the best mortgage professionals in the industry. If you're looking for a mortgage professional referral, feel free to reach out to us. If you're looking to get going on buying or selling a home, we'd love to help you. I have a lot of agents that work for us here at the brokerage Thanks for listening this week. We really appreciate it. Remember to subscribe and share this podcast with your friends. Any comments, questions, concerns, feel free to PM, DM, text me, call me, whatever works best for you. And I look forward to talking to you next week. Have a great day. Thank you.